Good morning.
Good morning.
Good morning.
Fiskantes, is this what you sound like?
Yeah, good morning, everybody. I think that's everybody. So, yeah, welcome, guys, to the Perp V2 Twitter Space launch party. We have a bunch of guests that are here to sort of talk about what they're excited about for the Perp V2 launch, and also just to talk about sort of what's going on in DeFi and sort of the general crypto space. So I wanted to first sort of get an introduction of everybody. So my name's Lawrence. I'm currently working in business development here at Perpetual Protocol. Yeah, I wanted to get a quick introduction of everybody. So maybe starting with Yenwen.
Hi, everyone. I'm Yenwen. So I'm one of the co-founder of Perpetual Protocol.
And then maybe going on to, Dan.
Hey, how's it going? Dan, CMS Holdings. We do a number of different things in this industry. We're pretty active traders. We're becoming more and more active derivative traders in DeFi, which is probably the most relevancy to this conversation. We're investors in Perpetual Protocol. We're pretty active on that front. Brian, who will introduce himself, is also on our team. He handles most of the automated sort of like trading activity that we do in like the DeFi derivatives narrative. But mostly sort of run a venture/liquid trading book that touches a number of different points sort of in crypto.
Yeah, and also, Brian?
Yep, I'm Brian, quant trader at CMS. I've been trading on Perp V1 for a while, pretty much since the beginning. Look forward to gearing up here to V2. It's pretty exciting stuff, so happy to be here.
And Fiskantes?
Hey guys, Fisky on the mic. I'm from Z Prime Capital and I handle memes and shitposting on Twitter. Nice to be here.
And McKenna?
Derivatives trader and also the first referral for Perp Protocol.
Awesome. Yeah, it was really nice to have you guys all here. So I just want to get started. And sort of the first question I had was, what are you guys excited about the most for the launch of Perpetual Protocol V2? And then sort of like a follow-up to that, what are some of the future upgrades to V2 are you guys also really excited about?
So I can start. I'm not really a trader, like active trader, but I think that limit orders are pretty important for like any sort of meaningful trading activity on perpetuals. And for the future, I would say the composability, to be able to connect Perp with other projects that can build on top of it. If we can enable that on these rollups, that would be amazing. And of course, scalability. We need to scale the throughput to be able to really trade actively. So, yeah, I hope that rollups will get more active in the future, and Perp will be one of the go-to venues for active trading there.
Yeah, for me, probably the biggest thing that I'm looking forward to is cross margin. On V1, there was like, I had to write a lot of code to handle margin for each specific market, and being able to just like toss in some USDC and just go ham with it on V2 it's going to simplify a lot of things. So I'm really looking forward to that.
Excited in regards to the permissionless markets or creating perpetuals permissionlessly. I think that's a very big value proposition for derivatives dexes. Basically, anything with a Uniswap TWAP or a Chainlink price feed can be listed immediately. I think that's going to bring a tremendous amount of volume to derivative dexes, basically getting exposure or leverage exposure to long tail assets. And then also having that being faster than like a SEX listing. So yeah, that's one thing I'm very excited about.
Yeah, so I think all the additional things that are coming have been covered by everyone who spoke before, but I think there's like a weird sort of situation that's going on currently sort of in the DeFi derivative landscape. We're getting to a point where like liquidity is very good. It's not like as great as you see sort of on the centralized venues. It's getting there, but there's like been a couple of like sort of reasons I think that there hasn't been mass migration over, or even like a material sort of migration yet from the centralized venues to the derivatives venues. The biggest thing going in that is obviously like sort of regulatory pressure additionally on the centralized venues. But even beyond that, like the biggest issue is twofold. Like one is like the breadth of tradable assets is smaller for a number of different reasons. Historically, that will slowly be solved, I think, by the ability to just create the pools, as McKenna was saying, on anything that has like a TWAP. So that's good because that'll massively increase the ability of the breadth of assets to be traded, agnostic to like sort of the team needing to do anything, which is like always going to be a gating factor. So you'll be able to move faster, I think, than the centralized venues on getting derivative sort of activity on things. So that's one of the big things. And the second thing is like the cross margining. So like the fact that balance sheet's like really hard for active traders. Specifically like larger desks that are looking to like provide liquidity and or take liquidity across a number of venues. Like it's just like the constant sort of gating factor and like how much you can do at all different venues. So that sort of collateral beneficialness of like having the cross margin will hopefully materially increase the liquidity and sort of the available like trading pool capital on these venues. And then that should feed on itself, thus making like execution, liquidity better on them, and then drawing more traders in because those like options are better, plus more options on them. So like I think you're getting to a point where like the centralized venue experience is getting much closer to what you're going to get in the DeFi area. Look, for one, like I think that they're going to be on par like in due time. It's just like there's these little switching costs and like sort of differences in what you get are really like that hump that needs to like go over if you're not being forced out of a venue for, like I said, regulatory reasons. So I don't know, I'm pretty bullish on both of those things combined going forward and like really making a pretty on par experience.
Yeah, for I think all the above points are, I mean, like really psychic. I mean, like because we built that, but I mean, personally, I do feel that the composability is the most, important, and I'm really excited that we finally like can move on to a layer 2 chain that working with the community. I mean, instead of kind of like using a, the SKY that really great, but not lots of like projects want to migrate to that chain. So I think optimism, the V2 is on. Really is the kind of like the key that we can actually composable with others. Yeah.
I'm actually really excited about the D-Hedge integration, basically giving pool managers derivatives access, because right now they only have like synthetic asset exposure. So obviously just kind of like being able to like hedge a position or even just like getting leverage long on something that they're very bullish on. Yeah, that's one thing I'm excited about.
Yeah, there's a tremendous number of things that can like be built on top of this that are like very interesting to a number of different like players in the ecosystem. A lot of it's going to be contingent upon like how good liquidity is, like sort of like access and like ability to plug into it. But it's a very, very interesting path forward of things that can like be built on top of it. At minimum, there's going to be a bunch of things that really have to be done around like sort of managing of like LP positions, sort of in sort of controlling effectively like what limit orders would look like on that system. But like even if you just think about it in terms of like the ability to like naturally hedge positions inside some like other portion of DeFi, like it's a pretty powerful thing that like I would say is basically unused at all in the industry thus far in any of the other sort of protocols.
One more thing I kind of forgot about is user created markets. So I can see, I would like to see, users creating new markets and managing them and attract liquidity to them in like more like decentralized manner. So not everything is handled by the core team. I think that's something that will probably happen more in the future when the core is already established, right?
That is true. So not everything will eventually be handled by the core team, with like permissionless markets are sort of live. And yeah, I think this is like a really great sort of segue into sort of like one of the next questions I wanted to ask is like, one of the main focuses of Perpetual Protocol V2 is composability. So that's something that everyone sort of touched on here. And so what is the importance of composability for Perpetual Protocol? And then what are your thoughts about the importance of composability in broader DeFi?
Yeah, so I'll take a stab at it. I think look, from my vantage point, like the composability angle is most material because it's kind of like, look, there's two reasons that like DeFi in general should win out against any centralized sort of service, if at all. And like I think one of them is like permissionless, right? The fact that like anyone can interact with it, and like there's like real gating factors in certain like geos and regions, or like reasons for another that like you can't pay centralized services. But the composability angle is probably a really good second, where like the ability for like pieces of the system to like interconnect and like work seamlessly with each other is like something that you just don't get in centralized venues, right? So like if you have a loan with Genesis and you've got let's say here's a really like good real life example, right? Let's say you like have a huge slug of ETH and you got a cash borrow position on Genesis against it, but you like hedge the position with futures on FTX. Like that package structure isn't useful to you, even though like it should be a much more capital efficient thing. Now you could do all the trades with one venue, right? Like you could do the borrow with FTX and like the hedge, and then like that would like open up balance sheet to you. But like it's in the current system, like you can't connect all of these different pieces together, and it does like cause not issues, but it's like inefficient because of that. Because like all those centralized venues can't and or won't interact with each other. And this is something that you don't have that problem necessarily with DeFi, right? Like all these pieces can interact, and like that should be a net beneficial experience, and therefore a better winner longer term.
Yeah, I agree that composability is the biggest thing. I think it's even more like important and interesting than like decentralization or censorship resistant in some sense, to be able to plug whatever you want into existing financial applications without permission. So like permissionless composability is the most important property of DeFi, I would argue. At the same time, it's kind of a double-edged sword because it increases the complexity of the overall system, and it can create a lot of like security bottlenecks. And the complexity can be so high that it's then hard to kind of assess how the system really is robust and secure. At the same time, it's still better than what we have now because everything is open, so we can observe it in the real time. So I would say, as CMS said, it's not positive, but I think we will see some sort of a some composability management approach in the future, where some protocols will try to restrict composability a bit, like interactions with their protocol, in order to increase security and reduce attack surface. But yeah, I think it's too early to talk about it. I think right now we are in an expansion phase, and we need to discover all the interesting use cases and emergent properties of composable DeFi applications rather than try to restrict it.
Yeah, I agree that it's really risky when like you kind of like have like a lots of layers like combined together. But at the same time, I mean like if we kind of like limit that, actually, I mean people might not want to experiment like before, like right now. So I personally still feel that we should open everything up so for people to compose, and we probably like will learn like once something fail, but still I think this is, I mean like how what I mean kind of like move the industry like forward. I mean instead of like just like trying to be like more conservative, but at the same time I also think that I mean so we see lots of trading volume on centralized change like BMax. I think that's really great. I mean, like it kind of like demonstrate that a lot of people want to trade crypto, but at the same time, because it's harder to be composable, I mean, from a centralized change point of view, I think it actually cannot reach like I mean, kind of like people outside of traders. So you kind of like provide this like financial instrument, but you cannot reach like people, I mean, who don't really know how perpetual work or how option works. But with, I mean, composability, I mean, like we talk to lots of teams that they want to do, I mean, like probably like maybe like 30, 40 teams, they want to do structured product. So those structured product is really easy to understand. It's just a ribbon finance that like end user kind of like can really understand like the pros and cons of like that vote, and then can easily trust that kind of like trust that product, and then we can actually act as a kind of base layer to those products. I do feel that that's actually the end goal for Perpetual Protocol. We probably will only be like UI for like only like 20-30% of our user, but actually like 30% or 80% of our user coming from this kind of like integration or composability. So I do feel that that's really exciting, to all of us.
I actually view composability as the crowdsourcing of intelligence if the incentives are properly structured. It also makes it not zero sum as well. So, in case of Perpetual Protocol, you have third-party protocols that are crafting liquidity providing strategies. And if you were just doing that by yourself, for example, just using Uniswap v3 concentrated liquidity, you're not actually going to produce like a really good return compared to what you get with like a rebalancing strategy. So in a sense, it like really crowdsources intelligence for people to make these new strategies, make these new structured products, and further build like the ecosystem, and also allow people making it as simple as Uniswap v2, just removing all the complexity, and then allowing people to earn yield through that manner.
I mean, it's pretty cool, right? Like we've had this similar kind of like innovation in the broader technical industry. Like when you look at things like what Docker did and what microservices did, like that whole movement was all about like breaking down complex systems into very narrow, specific focused areas, and then like just connecting them all together. And that's kind of exactly what we're doing here, right? So I don't want the Perpetual Protocol team building me a lending platform. I want to use a world-class lending platform that already exists. And then I just want to be able to move my funds into a trading platform that Perp built. And it's kind of like that, like this whole composability thing. It reminds me a lot like these microservices. You just focus on what you're experts at and build the best system you can, and then just plug everything in through some kind of like, common layer, like common API, or right, like maybe there's going to be a new wave of industries like being able to plug all these things into each other, right? And like maybe there's a few companies that will come out as like industry leaders there. But like it's interesting to me that like we're following in the same footsteps as some of those movements and just like the technology industry itself. It's pretty cool.
I'll say one thing, which is like just to like taper sort of the greatness of like all the composability thing. They're the one like other side of this too is like the nested complexity of the system like makes it a lot harder to like digest like what the aggregate risks are at given times. And like this isn't like a huge issue I think yet, but like as things get bigger and they become like more nested and dependent on like other pieces of it, like look, the traditional world has like got the same problem, right? Like there's like exposure on exposure on exposure between like different things, and like you kind of like I'm not making a comparison that there's going to be a crash, but I'm saying this only like really ever shows itself when there's like a shock to the system in some capacity, which you like saw this sort of in 2008, where you're like, all right, why does like one piece of the economy move, and then like you've got issues and like all these other sort of things that you never like thought of that are like third derivatives or fourth derivatives of like a move. And I'm not saying like there's some like comparison to be made of like what's going on here, but like as systems grow in complexity, they become impossible for like individuals and or like groups to like really fully comprehend, and they like much more have to be like treated in these like larger like looking versions of things, but like you end up with not being able to fully understand how the system is too. So there is that side of it too, and like weirder things will happen because of this that like will sort of be unknown unknowns in the future. That being said, like I still think it's the direction that everything's like clearly going to go.
Yeah, I definitely agree, and I definitely see that there's definitely risk with composability as soon as like more protocols sort of start building on top of Perpetual Protocol. You're not really sure as to how their security measures are and what they're sort of doing on their side, so it does sort of introduce another level of risk. But also there's a lot of good to come out of composability as well. Also, so the next question I had was more for Yenwen, but it's sort of open to everyone else. And I just wanted to get the thought process behind choosing optimism over Arbitrum, and then some of the advantages of choosing sort of other Ethereum layer 1s and layer 2s. So you have things like Avalanche and then sort of other layer 1s such as Solana. So just wanted to get some sort of thoughts on why we chose optimism and sort of then leaving it broader to everyone sort of discuss as well.
Yeah. So I think the reason for for us to be like on Optimism, or actually we consider Arbitrum before, but we actually kind of pivot to Optimism. The major reason is that we have to build on top of Uniswap v3, so we need to be on the chain that where Uniswap v3, currently on. I think that's one of the restrictions we have. And right now, only Optimism and Arbitrum, those are the two chains that Uniswap v3 is on. So that's a reason. That's a major reason. And we target like Arbitrum at the beginning. Because we talked to the team and then we really like that technology, and then they launched it in September. Performs feels the performance is really well. The UX is great. The gas fee is high, but well, we can get to that later. But so we actually built on top of Arbitrum, and then we spent like a month, and then working on all the details, and then we launched this trading competition. But in the end of that trading competition, we actually got some problem, and then we kind of misunderstand like how the cap work, because previously we feel that the Arbitrum, Arbitrum 1, the performance at the cap is the same as like ETH mainnet, but actually is using another kind of a measurement. It kind of cap the gas usage by 80K per second, so which is actually pretty low from our point of view, because we take like how the gas usage on a sky, and then we kind of do a calculation. We feel that we can easily go above that, and then we will actually raise the gas price to, on Arbitrum 1 to something like ETH mainnet. So it kind of like doesn't work, and then we talk to the team. We try to find a solution, but yeah, it's really hard. And then because we still want to launch, and then we just like kind of like pivot to Optimism. Yeah, so I think that's the story. Yeah.
So I would like to ask, there are two approaches that teams take today. One of them is to just spray all the blockchains that are EVM compatible and see what sticks. And the other is to just pick one. You picked Optimism at this point and just stick to that. So what are the benefits of the second approach? The first is usually that you get much more usage, but you need to defocus your attention a lot to maintain all these EVM chains separately, right?
Yeah, that's a good question. For me, or like from our team, I think we will be actually on like several chains, but we will not like Sushi like deploy on every chain. Sushi is kind of like deploy on every chain. I think the difference is that we still want to. We are more like we actually want to grow the product. We are more like, I guess personally, I'm more like traditional. So I want to, really like invite people to trade on our platform. We want to have like, have some like trading competition, and then try to build up that usage on our platform. And compared to other team, they probably just deploy, and then maybe that they feel that the product will have like some, I mean, like, it's just like it will pick up by someday once people feel useful. I totally agree, but we are more like we want to have a kind of a create a venue for all the people to join. So I would say that we will definitely focus on a few. I mean, maybe not one, maybe like two or three, but we just want to focus all our effort, and also like the liquidity can be more concentrated, of course. Yeah.
I think the first approach really does make sense for protocols because you're simply maximizing revenue and then distributing that back to the network essentially, or token holders. So I do think like even like centralized garbage like Binance Smart Chain might be wise to deploy on there from a protocol perspective. As well, like one thing you have to consider is like the liquidity fragmentation. But I think this like only applies to like the layer twos. So yeah, it's one thing I'm trying to think about. Obviously, you're going to have deployments on Optimus. One, I say get on as many as possible.
Yeah. Yeah. I mean, like, I'm not 100% sure, but I mean, like for our approach, but yeah, definitely we should consider. I mean, going to more chains, and we are also maybe. I mean, like looking at like maybe like Sushi Trident, so that we can also have like a different. I mean, kind of like base layer. Kind of like we can operate both on like Uniswap and also Sushi, but that's also like one way that we can actually reach more chains in the future.
It's going to depend on third-party liquidity providers. So up to deploy with a concentrated liquidity and then bringing people to obviously provide that liquidity and adjust it. So you'll find on different layer ones there'll be different example, depends entirely where the third party.
Yeah, I mean, I think there's also just like some like thought though that like whether or not you're the one to do it, like the stuff will probably end up everywhere, especially because it's useful and like especially if it like starts to pick up popularity quickly, right? Like the idea that like sort of DeFi derivative primitives are only going to want to exist in like one sort of corner of like L2s or L1s is probably not going to be the case. And like anything that has like material substantive usage for like pieces of DeFi, like we'll probably see this stuff like ported over in some capacity, whether or not it's you or somebody else that does it.
Yeah, that definitely makes sense. And yeah, so also wanted to sort of ask Yenwen, is sort of like basically the main sort of dependency in regards to listing Perpetual Protocol V2 on other sort of chains is basically essentially Uniswap V3 for now, and then later potentially with SushiSwap Trident. Is that sort of just like the main blockers right now, and then just sort of picking the ones that sort of fit the sort of best for Perp and its sort of vision?
I mean, right now it's like 100% we need like Uniswap V3. I mean, Trident hasn't deployed yet, or it hasn't launched yet, so we don't know yet. We take a look at the code, we do some research, but I think that's it. Even if we can like, even if like like there are lots of other people deploy, I mean, Uniswap V3 on different chains, I do feel that we still will pick like one or two and then focus on those two first and then grow it a little bit. I agree that the liquidity fragmentation might not be that I mean like that big a problem, but yeah, I think we were just like trying to deploy like one by one and then give it a try and then see how the community react and I mean kind of like make a decision after we see I mean the progress, I think.
Yeah, I mean, look, you got time here, right? Like, you still got to get the current incarnation like going humming on real volume. Like, I think it would definitely not be good to spread yourself too thin too quickly. Like, getting the core product operating on one portion of the ecosystem first, best, fastest is like by far the best like plan.
Yeah, I think that sort of definitely makes sense, is to not sort of spread yourself too thin before everything sort of gets tested for V2. So this next question sort of goes to Dan, Brian, and McKenna actually. And this sort of is around like growing regulation regarding derivatives trading within crypto. So you have Binance, where it's sort of slowly countries around the world no longer you're allowed to trade derivatives on Binance, and sort of just other sort of exchanges now they're starting to crack down. And so how do you see decentralized exchanges accommodating for users that can no longer trade on these sort of centralized exchanges? And then maybe for these new users, what are some of the edges of trading on a decentralized exchange versus trading on a centralized exchange?
Yeah. All right. So there's a clear trend. So here, not to get like too into like the global sort of regulatory like framework, but there's a couple things going on, right? Like, I'd say the biggest issue that like sort of brought all of this all to like a front is the fact that like Binance is massive, right? Like if you look at like the aggregate volume that Binance is trading in a day and how much money is pumping through that volume, it's like a really, really big financial center, like globally. Like whether or not like you like look, and I tend to believe that like pretty much all of what you see is like true, like there's like the volumes are real, but like even if you like think like there's some like shenanigans going on, the end of the day is like there's tons of money flowing through that system every day. And like global regulators at some point were like, this is like big and like we have to pay attention to it. And like we don't really have a great idea of what's going on with it. And like that has become like a larger increasing issue. So what does that like mean and why does that like affect derivatives? So like the problem with a lot of this is like spot sits in a weird gray area. Now, like there's like fights going on in a couple different like geos about like who should be able to regulate spot venues. But like as of right now, like nobody really has the ability to claim jurisdiction on it. Like you've seen this like particularly in the US where like spot venues have like pretty much been able to operate under current like regulatory AML frameworks, but like they don't have SEC or really a ton of like oversight that like you would see typically for like a bank. Now there's like different agencies that want that, and like this is like a global fight for all this stuff. But derivatives are purely in the jurisdiction for most countries under their equivalent of like CFTC, right? So derivatives are pretty easy for countries to be like, hey, what you're doing falls under like this activity. Like we can like clearly exert like jurisdiction here. So this is like why derivatives probably have particularly been like the beachhead that regulators have been using to get in on things. Now, the pushback to that is like exchanges, if they feel enough pressure and they get enough subpoenas and they have like enough like questions being asked, they're just like slowly cutting off the portions of the world that are like asking questions or like are trying to like get involved. Like the US was like very clear about this, and like this is why like the United States is pretty much like you can't do any derivative venue related activity in crypto. I mean, like you've got CME, you've got like potentially some other solutions that are like coming out there. Like that LedgerX acquisition is really interesting because of that, because it was like one of the sort of crypto native venues that had like the licensing to do it. But like end of the day, the pool of people that can like trade on derivative venues globally is like shrinking. And it's not like shrinking very, very quickly, but like it's one of these things where every year you're going to lose a couple of geos probably. And like in particular, there's been a bunch in the last year. Now, that means you have a couple options as like an individual. You can try to incorporate outside, but then sometimes it matters if they look up like the sort of UBO stack of like who the owners of the operating company are and like if they're in a geo. But the end result is like that pool of people is becoming somewhat displaced, and they still want to trade derivatives. Like the idea that like they just like won't trade anymore is like pretty much wrong, right? Like we're just like seeing that like they'll either go to another exchange that has a different interpretation of like who has jurisdiction, or they may end up in DeFi derivatives. I think what's interesting is that once the DeFi derivative experience is like good enough, there's probably a stickiness of those people going there and then not leaving, right? Like, because you only are going to do so much work to be able to like operate on some like other venue. But if the experience is just as good, you probably just stay. And I think this is like somewhat the forcing function of people from the centralized derivatives venues like onto the DeFi derivatives venues, like as time goes on. So this is like sort of, I see like the natural progression, because there's just switching costs. Like people don't want to just like do it. And there's like non-zero like technical and like accounting lift of like moving over if you're doing like a real amount of volume. But like once you're there, it seems to be that like you should likely be staying if the experience is good enough and the liquidity is good enough and you have access to what you had before. So I think this is somewhat of the trend of what we're seeing on a lot of stuff. And then you might just have migration over because you're like, well, maybe I'll eventually have a problem. And also, like, I don't want all of my like capital tied up on something that like might be like seized or something like that. Not that I think that's a risk anywhere. I'm not trying to like say that, but then maybe you just have like flight to those venues, and it sort of like naturally goes that way. So I don't know. This is sort of how I see things playing out currently. Like derivatives are always going to be a dicier area for exchanges to operate regulatory wise than spot, and that trend should move a lot more of this, I think, to DeFi as a function. So like if you look at like how much DeFi spot volume there should be versus like the centralized exchanges, it's probably a lot less than the relative deriv volume that will be there versus the centralized exchanges. So that's sort of see how I see like the regulatory stuff like playing out over time. And this is very much evolving, right? Like this changes every quarter. And the problem is like crypto doesn't fit into like nice buckets for most regulators.
So yeah, the other part to that question was like for traders coming off of centralized venues and coming into a DEX, what kind of edges can they look for? I wouldn't be so worried about what edges they can look for, is more like how can they get trapped? Because there's definitely ways that you can get into trouble. Like I'm not a big user of optimism yet, and I don't understand like how the MEV stuff works there, and how fast the chain is really like, but like moving, like when you need to move collateral, like so if you needed to send something from FTX to Binance or something like that, it's going to go pretty quick. But like if a network gets clogged and you got to do like a withdrawal from an exchange and then deposit into Optimism and all that stuff, like it can take time. And generally when you need the collateral is when the markets are really moving. And if you have to defend some of your positions, you could get kind of in a bind. That's kind of one thing. So like managing your margin and like being ahead of network congestion is going to be a big thing to watch out for. Another thing is like, you got to watch like the Oracle updates. Like everything kind of happens a little bit slower. And you just got to kind of like be aware of that, right? Like when the Oracle's updates and the funding rates change, it's just like it's not going to happen instantaneously like you'd see on FTX perps. And like I don't really understand the TWAP Oracle yet on Uniswap. I don't know what kind of games can be played there. If people can game it and like move the Oracle one way or another, so it's like always paying them funding. Like we don't know these kinds of games yet, but if there is a game to be played, trust me, bots are going to take over and play it. And then that brings me to the final point, which is like trading on chain is not like trading on a centralized book, right? When you put your order out, again, I'm an optimism noob, but like it goes into a mempool. Everyone can see it. Everyone can know what you're doing. And with that can come front running. So like you put massive slippage against these things, chances are, right? And everybody's experienced this, right? With the sandwich attacks on Uniswap from last year. Like all this stuff, like bots are pretty heavily like trading in this space and taking advantage of literally anything that you can do. So you just got to kind of learn to work within those bounds. Like your slippage tolerance, just assume that any trade that you do, any slippage that you set, a bot is going to take you within like pennies of that slippage. It's more like you got to watch out. Instead of like trying to find edge, you got to protect yourself first. And then once you kind of get used to the on-chain stuff, then you can start looking for edge. And like, there's definitely going to be arbs because on-chain stuff moves slower than like these giant liquidation flashes that happen on the centralized exchanges. So you can like, sell on chain and buy on centralized and make some money there. Like there's definitely edge to be had, but I would recommend to stay cautious at the beginning, especially when like a new version came out, like Perp V1, we had a couple incidents there with some liquidation waterfalls. That was tough to get through. I would just say be cautious, keep your leverage a little bit lower until like all the kinks are kind of worked out and we kind of get a feel for what happens in these leveraged liquidity pools and stuff like that. Yeah, that's pretty much my take.
I want to ask, centralized limit order books are kind of, punishing as well for, let's say unsophisticated traders. If you put your order where they shouldn't be, they are going to get picked off just by the entities that see the whole order flow. Here everyone sees the whole order flow because it's on chain, but in these centralized systems, there are only like select number of entities who can see the whole order flow and the rest don't. But the result is kind of similar, isn't it true?
So I guess, well,
that was a question.
Yeah. Wait, so you're saying like on the centralized venue, like, what information flow are you like particularly like? You're talking about like where like people's like margin usages and like where sort of like stops are placed and all that jazz.
Yeah. There are still some entities that kind of see that, and I know it's regulated in like TradFi, but in crypto, I don't know. I kind of feel that there are still entities that are taking advantage of that, and it's just a bit more murky.
Right.
Here in crypto, at least I think it's transparent for everyone to see.
Yeah, I mean, like it's hard because like I'm not gonna speculate what like may or may not like sort of be known on like sort of information like flow like on the exchanges. Like, do I think like every exchange is operating on the up and up? Like, probably not. But that being said, like, yeah, it's tough because like I'm not like gonna say I get the sort of like democratic angle to it where it's like everyone has like full transparency into like sort of the full visibility of the book. That being said, like there's always still going to be like massive information like asymmetries, like just because of how much like prints off screen, like how much is like unknown sort of like flow like that's going not necessarily even like through like the chain sort of thing. But like, yeah, I mean, look, there's a real angle to like the democratization of like all of this like sort of trading activity, and that like you have a system where you can't have people with more information than others. I think like there's something to be said for that.
Thanks for sort of like clarifying that, and I definitely can see that some of the early stuff is usually just you sort of working out and sort of figuring out what's sort of the risk that you're taking on, and then sort of later on finding the edge and sort of like the regulatory standpoint as well. And so the next question I sort of wanted to ask was, so to Fiskantes, what was it like being an early investor in Perpetual Protocol, and how things have changed from like then to now?
Well, everything changed very drastically. We invested, I think it was during the March crash in 2020, when like COVID fear started to get real and everything crashed. And I remember back then talking to the team, to Yenwen and guys, and they were actually starting to build it. They only had a sort of a white paper. The name of the project was Strike Protocol, not Perpetual Protocol, as today. And it was kind of hard still to get funded. It wasn't like now where everything gets funded easily and you have oversubscribed rounds. It took some time. And I remember they were actually, before that, they were building portfolio tracking or accounting tool for crypto. So very different thing. And one of the, so to speak, red flags was that they weren't really experienced traders, or they didn't come from like trading environment. That being said, the idea of virtual AMM and the design of the project was so interesting to us. We were like, we were chatting about it a lot. We connected via my article about synthetics and like Oracle front running, and we are talking deeply about mechanism design. So we actually were like very impressed with how they are thinking about it, a bit out of box, I would say, and maybe even the fact that they aren't coming from a strictly exchange/trading background allow them to think more creatively about how to construct this new mechanism for perps. and I don't remember like showing it or showing it to some other investors in the space. And the feedback we got from some of them was that this is not the world-class team that is able to build like world-class perpetual protocol. They don't have experience with like leveraged trading products, or they weren't like working for exchanges or something like that. So I mean, it motivated us even more to support them, because we kind of like these. We like the narrative of backing someone who is outside of the circle, who is an, so to speak, outsider, who can build like cool things creatively without being part of this already existing like expert group, or a group of people who already kind of are entrenched in how things work right now. And yeah, I mean, it turned out, yeah, we were actually, I think we were the first money in. I don't remember now, but I think that's true. And yeah, so it was quite exciting to back a team that doesn't have as much experience but has many creative ideas. And early on, we were chatting back and forth a lot about all different things. Right now, they grew a lot. I feel that they became one of the most advanced teams to build this thing. But it took some experience, and like the AMM version 1 of Perpetual Protocol was, I mean, it was a great genius idea. It had its flaws, and we saw some of them kind of in the wild, but it was still, I would say, miles ahead when it compares to anything else that was being built back then, when it comes to like perpetual decentralized perpetual like protocols. So yeah, so I mean, exciting, and we are lucky to be on that journey with them from almost like from day one. And yeah, it shows that even teams that are not really super connected and super like knowledgeable about some topic can actually come to the space and build something cool and big, and continuing iterating it, even though they may miss some things that some like professional or expert from the field wouldn't miss. But this expert would also kind of fall into the trap of thinking too much inside the box of how things work now. So yeah, happy to be on board. And yeah, if there are more teams like that, like outsider teams, just send them my way.
Yeah, thanks, Fisky, for the good words. Actually, we co-email Fisky. This is actually the only like successful co-email that we got. So I mean, like co-email does work. That's actually my learning. But I mean, Fisky has been with us like from the beginning. I mean, gave us like so many suggestions. So really thankful for his support. And also, I mean, like CMS, and then I mean, like are among the actually the like one of the first investors. I think that I mean, like it's I'm really nervous at the time when we pitched CMS, because like Fisky said, we are not trader. We are just engineer. We just like kind of like we feel that we can build this thing, but we don't really know like if people want to trade. I mean, like CMS is the first like the trading group that we talked to, and then they're willing like kind of like take a chance on us, and then like trade on us like from the beginning. So really thankful to them. And yeah, I mean, like for us, I mean, like Fisky said, lots of like investors turn us down, of course, because of COVID, and also the other reason is that we don't have background. But I do feel that trying to make it work is really kind of rewarding. And then I mean, like really, I mean, really excited that we can see the Perp V1 and V2 actually working, and then people trade on that, and then people are happy with the product. So yeah, thanks again for you guys. Yeah.
Yeah, shout out to Multicoin. They're the guys who brought us into that one initially. I will say this, like I kind of expected this thing to blow up like a couple times in the beginning more than it did. So it has been like look, like when you hear the pitch on it initially, you're like, look, if this works, it's going to be huge. Like it makes sense. Like I get it. And this is like also when Uniswap was starting to get like really, really hot, and you're like, all right, I get like this like because like I was skeptical of that whole AMM model in general, which like turned out to be like really wrong. But like I was like, look, like if you have a way to do this in like a derivatives angle, like this is like going to be a thing. Like people will like want to do this. That being said, I was like, this is probably going to just like fucking toast like a couple times like out of the gate. But like that's fine. Like figure it out, like make it work. You're just gonna like, and like, look, what's great about like crypto in general is like there's like a high tolerance for pain. There's also like a high tolerance for like iterating and failure. So it's like, look, like they'll get it. It'll like work out. So look, happy for the ride, and like things have worked out significantly better than I ever would have thought they were gonna.
I kind of feel that there are many like I don't know, smart asses in crypto who find a little flaw in some design or maybe even a big flaw, and they are like, this thing will never work, so we should all stay out of it. But usually, like when you think about it, like we are still like in early days, and usually founders who are capable of iterating and pivoting and like improving upon the design they have, they do really well. Like we have seen a couple of very successful pivots from projects that didn't have a good design, and they are still iterating to this day, and it's like good enough to kind of keep growing and attracting users and experimenting further. So I was never deterred by some design flaw. If it wasn't something that's like super critical, and if the team wasn't like super focused on just one direction and having tunnel vision and like rejecting all the new ideas, I never saw like something that's not like really the optimal design from day one as a obstacle for us to invest. And I think like that's something that some of the investors I spoke to, or even like users, they kind of don't see that way. I don't know why.
Yeah, so much of this is just surviving and like plowing through. It's rough. I mean, it's rough though, right? Like it's like you got it. There's a lot of people talking a lot of shit constantly, and there's like a lot of like probably very good reasons to be skeptical. But like I'd say like there's like one consistent trend. I've been doing crypto now for too long, but like if you've like survived and you've been like able to continually like operate, like it's pretty much worked out. Like I can't really think of a ton of examples where like that has been like a failing sort of thing. Even if your initial like plan was just like ridiculous, like if you just survive, it'll be okay.
The VMM model was completely broken, and obviously there was problems with the insurance fund and the funding rates. But obviously pivoted architecture, and even so, like Perp was the largest derivatives DEX for a considerable amount of time, pulling in like over 100 mil of volume per day. And then that was obviously very good revenue for Perp stakers. So yeah, it's one of those things where obviously people are very skeptical, but the AMM design space is so big as well. So it's probably good to adopt like the CMS methodology of spray and pray. Because it seems to work pretty well.
Like the thesis is obvious, right? Like leverage trading should be decentralized the same way spot trading is. There should be this option for users, and right now we still have a lot of room to catch up with spot trading on decentralized finance field. So it's still like pretty easy to long anything sensible that tries to facilitate that. And there are multiple chains, multiple approaches you can take. So, and you don't really know which one will win. There are like a lot of factors you can't see right now. So it makes sense to just bet on that direction and connect to teams that are smart and happy to work on the solution and just pivot when necessary and just keep building. So yeah, I think it's still one of the most obvious trades you can make within crypto, or maybe at least within DeFi.
Yeah, I mean, people love this. This is like a thing that everyone wants, right? I don't know. It's going to about $150 billion today, right? Like that's like a lot of money. Like that is a material amount of people trading real sort of size through things. And if you like think in any capacity that this isn't going to like spill out into like a decentralized venue, you're just like wrong. Like, it's just like there's no way there's not going to be like a massive thing in there. And like the volumes that are currently in there are minuscule compared to where they're like going to go. Like you don't even have like a real venue in like the top 10. Like it's just not there yet, but it will be. I don't know. Like there's not a lot of things I feel super sure about, but that is like definitely one of them.
Well, like when I had this derivatives thesis last November, like the thesis was basically after DeFi summer, a derivatives DEX will flip Uniswap spot DEX, and basically have like the largest trading volume within DeFi. And we've only just seen that happen as well with DYDX, pulling in more volume consistently than Uniswap. So yeah, as Dan was saying, the volumes are still incredibly low for where they will be in the future. So it's just giving time for layer twos to increase TPS, and then obviously building out some more of the functionality which is coming with Perp v2.
Yeah, that definitely agree with like the sort of size of the derivatives market versus the decentralized spot market right now. And so one of the questions I wanted to ask before sort of like wrapping up and sort of going on to like questions from the audience is, what are some of the innovations in decentralized derivatives that you guys are the most excited for in the future?
Like the whole point of derivatives optionality. So you can see this in the options market where you can define your own strike price and expiry date for these options. And then obviously, I'd like to see some features, say, for example, someone was getting long ETH and then using ETH as collateral. But then after realizing the PNL, it basically swaps automatically for some other asset to realize in. So you could use your ETH as collateral and then realize your profits in WBTC, for example. Something like that is like really interesting. And then obviously you get the whole structured products, as you can see with Ribbon Finance. I think that the structured products is like very early as well. So
I think like the clear like one going forward is like just like, I mean, this is probably like an issue, not an issue, but this is probably a big iteration that can happen on like Uni V3 too, is like just the managing now of like those LP sort of positions and like effectively like what it like would come to like limit orders and things like that. Just like building the core trading functionality that you have on a centralized venue like into these protocols is like probably just like the easiest win, and like making that experience look as similar as possible. And it's definitely one of these things where it'd be like, don't reinvent the wheel. Like you want it to be as much like the centralized venue as possible, because like that's like a pretty iterated on model at this point, and that's like generally like what users want and what they're comfortable with. So like having like all that like functionality built in, whether it's like a trailing stop or like whatever, like that's like sort of like I think the pieces that need to be like bolted onto this thing second.
I think the permissionless markets is going to be pretty cool, because a lot of the times you end up doing things like farming with stuff, and you're like, oh man, I really wish this had a perp. Right. Well, you don't have to say I really wish anymore. You can just go and create it. And yeah, it might be tough to get liquidity in there, but like it's kind of like it's somewhat of a hurdle now. You hunt for these awesome farms when you're trying to get yield, and you're like, man, I wish I could just hedge this stuff out. And you know, in the near future, you're going to be able to. So I think it's pretty cool. We're going to see some pretty interesting things on V2 for sure.
One thing that I'm really interested to see that happen is the cost margin between projects. So right now, like per V2, we have the cost margin. So, you know, like every market is cost margin together, but, you know, like, but our like capital or our margin cannot be like bring on to like another option protocol or like other, I don't know, a structured product. So I think if someone can figure that out, I think it's really hard problem. But if someone can figure that out, I think that really can increase the whole capital efficiency on the whole ecosystem. So that would be really cool.
Yeah, those are some like definitely really interesting sort of innovations in DeFi, and sort of this decentralized derivative space that definitely are coming to Perp v2, and then sort of like also hope to see them sort of like implemented in sort of the broader ecosystem. And so this last question is actually for McKenna. And the question is, what was it like working with Perpetual Protocol regarding to the referral program, especially you all being the first referral, and then also being an early supporter of the project?
it was very good working with the team in the initial days. I'm very appreciative of the offer because it allowed me to build an even higher conviction bet than I had previously. I basically got into Perp in January after doing a lot of research on the derivatives dexes. We got a few good people from Twitter on it. These really big derivatives traders. We've got them in as referrals, and I think a lot of them have also applied to be on the token listing DAO. So we're all going to basically work there to identify opportunities in the market and get them listed on Perp immediately so people can obviously. I very much appreciate the opportunity to work with the team. It's been.
I think we referred you too, right? Like, I think Brian used your referral code.
Thank you to CMS. It's Brian used my referral code in the initial days.
Yeah, awesome. And so now it's just sort of like up to sort of like the broader audience. If anyone had any questions, just sort of request to sort of put your hand up, and we'll sort of invite you up and just sort of ask away.
Congratulations for bringing V2. Like I have been following this project from a long time, so I just saw that you guys got this on Optimism. Just wanted to understand, are you guys also planning to bring this on Arbitrum or any other layer 2 protocols?
I think the question is that are we going to bring a Perp v2 on other, under layer 2? If that's a question, then yes, I think that wherever like Uniswap v3, deployed, I think we will definitely consider that. But like I said before, like we probably will start with 102 at the beginning, and then grow that grow the user, grow the trading volume there, and then once it reaches a certain level, we will consider other chains.
Got it. Thanks, Ian. Thanks a lot, guys.
Have you considered piecing together several V1s to make skipping the V2 step altogether, going straight to 3 or 4?
I don't quite get this question. So, can you elaborate more?
Yeah. Well, if you took, say, a couple of V2s, a V1, and maybe a second-hand V3, you could get all the way to 7 pretty quick. Without the effort. I thought that might be something you could consider.
Good one.
Yeah.
I suggest amending the roadmap. Yeah, definitely makes a lot of sense. Yeah.
Yeah, that's definitely very interesting. If anyone else has any questions, just sort of request to speak.
So I think the question that's obvious and nobody is asking for some reason is like when liquidity mining or like token rewards or token incentives for trading.
Actually, I don't catch a question. So, do you say that when is the
Yeah, I'm asking. Yeah, when the like incentives will kick in, if ever, on Optimism for perp trading.
Yeah, I do feel that it will. So we have that plan. It will happen soon. Because Christmas is actually near, so we are actually thinking that we should do this before or after Christmas, and then there are lots of other consideration. But definitely, please. If you trade on Perpetual Protocol, I think there are some of the rewards that will be retrospective, and you will definitely get like those rewards. But we will announce that when we are going to do the liquid mining. Yeah, we want to. Definitely give you a try and then see. How if affect the trading our system, and also like other rewards, like try to incentivize people to do like different things on the exchange, and then see how it goes. Yeah. So stay tuned. It will be like soon. You won't be like several months away. You will be like several weeks away.
Okay, I have one more. What do you think about DYDX at this point, stealing the spotlight?
Okay, so DYDX, they have done a great job. Lots of trading volume because of they have this like huge incentive program. At first I'm a little bit skeptical about will it work, but it actually looks fine, I think. So it's working. I think it works as like what they designed. So lots of people trade there. For us, I think it definitely a really good kind of a competition, but at the same time, I do feel that we have like several things that we do much better than them. I think the first thing is like composability. We are more decentralized. DYDX is still like like order book model, and then they have the order book of chain. They do the matching of chain because they have to serve that speed. So I think it's just a little bit harder if you want to build on top of DYDX. But for us, building on top of us is just like building on top of Uniswap v3, but you have leverage. So you can leverage on like begin maker, begin taker. So that's the advantage we have, and then we will kind of like iterate on that. And I think that we will more focus on the composability. And personally, I do feel that this is where the whole DeFi ecosystem shine. I mean, like the whole composability, the AM design that really like more like DeFi native. So we just put all our bet on all these. Features. Yeah. Hope this answers your question.
Yes. In a way that's a bit less spicy than I would hope, but it's okay.
I will never be spicy.
It's a solid protocol built on top of or using Starkware, which is like some of the best zero-knowledge cryptography in crypto, basically. It's a really good protocol, but I think one of its major flaws is that it has no revenue or fee-sharing model. Basically, the DAO basically collects all of the derivatives trading fees. So in a sense, Perp has superior tokenomics because there's more of an incentive to stake and backstop the entire system because you are getting a portion of the derivatives trading fees. And then, obviously, as we were discussing there as well, it has huge advantage with composability, which is you see any major protocol in DeFi is really strong in composability. So it's a fantastic product. I don't massively view it as waves really being distributed to the users, market makers dumping on them. But it's a good product.
Yeah, I've said this a couple of times. I think like we're obviously investors in both, so not that I have to straddle both in this conversation, but I tend to be of the assumption that there's going to be a CLOB and a VAM for DeFi derivatives like on every chain at some capacity, and I think there's like more than enough activity in DeFi to be able to absorb two, let alone likely more. So I don't know. I think they're just like different flavors of like the same theme, and I think like in general, like you want exposure to both. That's like sort of how we've played it.
Yeah, I mean, we trade on both. For me personally, I like the fact that I can just spin up a node and I can start trading on Perp. And I can't really do that on DYDX. So that's just kind of how I feel.
Yeah, great. That definitely that was a really great spicy question. And I think that sort of is a great way to sort of conclude the sort of Twitter space for the Perp v2 launch party. So I just want to say thank you to all the speakers and guests for coming. So thanks to Dan, Fisk, and McKenna, and Brian for coming, as well as Yenwen. And so thank you everyone for sort of tuning in, and hope to sort of like maybe you guys can come check out Perp v2. And yeah, definitely really excited to see what the future holds.
Thanks, guys. Have a good one. Cheers.
All right, thanks a lot.
Take it.